Hello and welcome to another edition of Real Talk. Well, the message for the week is to get inflation under control, and that is we want more inflation. At the moment, we've got deflation, so it's put an interesting ricochet at a time when we all thought interest rates would go up. Interest rates are actually going to stay stable. The conundrum, of course, is the property market is driving like it hasn't driven for a long time. The government would love to slow that down, and how you do that is to put on the brakes and increase interest rates. But with our deflation at the moment, we really need those interest rates to stay stable. Interestingly enough, and by September of last year, the government would have liked about 2.7% growth in the economy. I think we've got about 1.5% growth, so that's the key. It's really interesting. I was just saying earlier today, since 2012 to 2016, I've never heard so many ambiguous reports about the property market. For those of you who are regular followers, you will know that I've predicted growth every year. What I find interesting is that a lot of the people that have been saying it's all going to crash, it's all going to burn, are now turning to being the believers and saying we're going to have another consistent year of growth. I believe we'll have at least 7% growth in the market this year, which is fantastic, but I can't see anything slowing. With undersupply, with the population coming to Melbourne, I think it's going to continue. Of course, the sector that's most under fire is the first homeowners, and the homeowners wanting to either upsize or downsize. If you're upsizing, it's a real battle. If you're downsizing, you're adding to your pension. So everybody's got various different circumstances that they're juggling. But the world markets across the board were very stable. Obviously, Trump continues to trump it, and that's having a slight ricochet in some of the markets, but certainly the commodities, precious metals were still slightly down, but resources are up with the exception of coal. That just goes to show that our mining sector is going to really continue to build. And I think those of you that hung in with the resource stocks would be very happy to have that now. But the economies around the world, China was actually up 1%. For those of you who watch regularly, you'll remember that they were down a couple of percent a few weeks ago. So their economy is starting to turn and to strengthen as well. Interestingly enough, the Australian dollar hit 76 cents in the dollar plus actually, which was really due to our trade surplus. Now, for those of you who've studied trade surpluses, what that means is we've got more exports going out, which means more money coming in. By Australian, it really helps. We've had less money going out of the country, which is brilliant. So if we continue to have more exports going out and we continue to have a trade surplus as we are at the moment, we're going to actually grow and strengthen our economy in a really hardcore fashion, which is what we're really all about. In terms of turning back to the property market, the figures for rental returns last year were really solid, pardon the pun, for the apartment market. So if you remember, we're chasing capital growth, we're chasing rental returns, and we're chasing a good tax benefit. Now, interestingly enough, houses returned 2.2% rental return, apartments 4.53%. Now if you look at the 4.53%, that's in the general market. We actually tend to overachieve that here at Solid because we get higher rents because we've got nicer brand new apartments right on transport and amenity. But if you look at the 4.53%, that's actually the return is better than the money. The money is out at about 4.3 at the moment. So overall, the returns in the apartment markets are very strong, probably the strongest they've ever been. And I've seen rents really build. I saw a report through ANZ saying that rents were very low last year. We noticed about August, September, they started to really return. And clearly, you'll always get a better rental return if you're renting an apartment in summer. I don't know what it is. People hate the cold. They hate to go out. They don't really like to change their rental agreements in winter. But in summer, people are more optimistic and they'll pay a little bit more rent. It's just a psychology thing. So with the talk about oversupply, the analysts are now saying, I think we got it wrong. The supply's evened out and the return was far greater. So I encourage everybody to look at all aspects of their return on investment. If you're not out of pocket, and your property over 10 years doubles for you, you're in a really, really good space. Thank you for listening, and I'll sign off on that note.